Welcome back. You're with us on the Budget Countdown, and we have a full house of tax experts here to decode what Budget 2025 might have in store for us, the common taxpayer, and of course the country at large, and the financial markets of the country, which is exactly what we're going to talk about now with our experts over here. So, Sameer, so many headlines happened in July, and I think the markets weren't even prepared for it. And the markets digested it really well, this 10% moving to 12.5%, right? Long-term capital gains. Are there any outstanding outlier issues on capital gains that need to be addressed?
So I would just pick one. Actually, there are a few, but I'll just pick one of them. This is to do with the offer for securities, the OFS concept. When a company is going in for listing, correct, the existing shareholders, the promoters can offer those shares as part of the IPO process.
Sure. Sure.
Now, the way,
and a lot of OFS has been happening.
Absolutely.
The market's been elevated, so people have been selling.
230 public issues and all of that, and the data is all out there.
Yeah.
So I would just say that these securities, right, are otherwise treated as listed securities.
Okay.
So even though they're unlisted, they're treated as listed. And the reason is that, a full STT is collected on them.
Okay.
So as you know, when you buy and sell on the market, there's a 10 basis point either pays.
Right.
In this situation, the seller pays 20 basis point as an OFS product. So the 2-year window, which is there currently for unlisted, because this is like a listed security, they need to rationalize that and make it 1 year. I think that's a big ask from a lot of the companies which are going for IPO.
So you're saying that anyone who has been a shareholder pre-listing,
yes,
right now they need to be a shareholder for 2 years to get the benefit of long-term?
For long-term, correct.
Okay. So if that can be brought down
that's
to
we rationalized and made it similar to, the existing listed 1-year term that is there.
Okay. So
that's one of the big asks that is there still.
Okay. Okay. All right. Bijal, anything from a, from a sort of investments perspective, capital market perspective that you want to see?
So I would just say two more in addition to what Sameer mentioned. One is, we've done a great job on rationalizing the capital gains tax rate for listed, long-term gains. Perhaps we can have a rationalization even for short-term.
Okay.
Because we have different rates which apply for, whether it's listed, whether it's unlisted, or for that matter, whether it's any other asset.
Sure.
So perhaps that's one. The other would just be, vis-a-vis what is considered long-term and short-term, the period of holding.
Yeah.
We have a 1 year, 2 year, 3 years.
Sure.
It's just too complicated. We could perhaps just look at a simplification with just one period of holding itself.
So, Sunil, comment on this. I don't want to connect the dots because I track the stock market as well. So I know, FPIs are leaving for different reasons and not tax. But I don't know, considering how the mood in the market is, do you at all expect any thinking on the tax front to look at not just more FDI coming into India, but maybe even, make it more attractive for the FPIs that have been rushing to New York, it seems.
Absolutely. No, so, okay, Surabhi, that could be for a variety of reasons. As well.
Yeah.
If you ask me personally, I'm not expecting any major changes now. But yes, if you ask me whether the FPIs are actually expecting, yes, they are expecting maybe a couple of things.
Okay.
One is they really find the revised rates of tax, both for long-term and short-term, little higher.
Oh, this is the feedback that you've been getting?
Yeah. Because they were used to paying, lower, tax. Also, I think, I know this is a big ask, but in my view, logical ask, because they know that historically, if you look at when the STT was introduced, the whole idea was that because long-term capital gains were exempted and short-term capital gains were taxed at a lower rate.
Okay.
Now that we have actually made long-term capital gains taxable and increase the tax rate on short-term capital gains, is there a case for removing STT?
Wow. Okay. That would be a big headline, right?
Absolutely.
But those STT collections have been growing pretty well. So
very robust.
It is, but it is still like couple of percentage of the overall tax collections. So So I don't know whether that is something
Sameer is smiling.
We should consider. No, I know.
I think if you want to contain fiscal deficit, they're going to count every rupee. So
every rupee counts. And that too, if you have to give any sort of giveaways on the personal income tax side, then maybe you need to do your math. Okay, very quickly, we're sort of rushing through final expectations on GIFT City. Again, a stated government intent of making it a thriving international financial center. What are the outstanding issues or anything remaining that needs to be done there, Sameer?
No, so 2 or 3 quick ones. I'll just say, like you rightly said, they want to make it a global financial hub, right? So they've done a bunch of things on the banking side, non-banking side. I think 2 things resonate. One is to the earlier question around, FDI. I think if they can promote how it can become, a global holding structure, right, for companies, right? There are a lot of companies which invest in India as well. India outbound companies which have holding company structures, right? So that migration to GIFT, if that can be made tax neutral, So
Right now, there is a tax involved if you're shifting that structure
exactly.
to gift.
So these are Indian company shares.
Okay.
The moment you move the holding company structure from a foreign jurisdiction to gift, there will be Indian tax because it's CGT. So can you give that one-time, exemption on that, just as they've given the fund industry?
Sure.
And the other is, today the banking units can issue ODIs, as it's called, on the Indian market, and there is no tax on the ODI holder.
Okay.
That needs to be extended to, the non-banking units as well.
Because there are a lot of non-banks that are setting up,
there are
their
AIFs
offices
that are sending up,
in gift.
and
Yeah,
absolutely.
yeah.
So I think that definitely needs to see
if
the
you
light
want
of
to
day.
have the whole ecosystem sort of come up.
Absolutely.
Final thoughts, lady and gentlemen, I want to talk about this whole rationalization of the TDS and TCS rates, because I remember every year I speak to you all and we talk about how there are some 30+ rates in terms of withholding tax. What are the recommendations and how feasible is it, Sunil, to bring 30 rates down to maybe 2 or 3?
It is absolutely feasible.
Okay.
Actually, today there are 30+ provisions. Okay. 9 multiple TDS rates applicable for the payments to residents and 12 different rates of TDS for payments to non-residents.
Okay.
So, of course, you can actually bring it down to just 3 or 4 different rates. Okay. So, I mean, that's point number 1. Point number 2, I think there are a lot of these threshold limits that you have in each of these TDS, provisions, starting from as low as rupees 5,000. I think that needs to significantly go up.
Okay.
And I think there are a lot of other terms and conditions.
Sure.
So this whole thing is making very confusing and complicated. So I think there is a big opportunity for government to actually rationalize the TDS provisions.
TDS, capital gains is done, maybe TDS should be the next one.
Yeah.
Final word, Sameer, what will the headline be? Again, the same question I asked Bijal. What will the headline, you think, be on the 1st of February by the evening when we're done with the budget? Tax headline.
I think it would say, tax simplification 2.0. I think something like that.
Lovely. That would be, I think, very well received by the entire fraternity. Thank you very much, all 3 of you, for coming in here and helping us sort of make sense of the broad budget expectations and the roadmap that the industry is looking forward to. Thanks for joining.
Thank you for having us.
Thank you.
Well, that's it. It's a wrap on this special edition of Budget Countdown. We'll see you again with more conversations in the course of the next few days.